If you're in the crypto space, I'm sure you're aware that we've been selling off the last few days. As you can see, overall bearish on the macros, and we're starting to see some bullish trend spots come in. Even going to the weekly is red, the daily is still red. The monthly you still see some green, but is majority red. And we're just starting to learn what institutional money is doing to the market. Now, if you don't know who I am, my name is EQ. Welcome to EQ Trades. And I really just wanted to go over an overall macro of where I think Bitcoin could be going into the next coming months. And in order to do that, let's just jump right into the charts. Now, if you've been following me or you're in the EPIQ trading floor, you know it's clear as day that this is a distribution. We've been in a consolidation range since February. We are just finally starting to test out of the consolidation range, which is very important. And it's also important to note that since February and March, we've been in a consistent downflow of volume, and then we've seen an exponential downflow of volume since June. So although everyone's been getting fed a lot of bullish news, the overall macro and volume of the market has been bearish. And you can see I have the zone marked here where we have almost 16% loss in give or take about 8 hours. Keep in mind, this chart is in EST, which is my time zone. At 8 p.m. EST is when the Japanese stock market opens. And as some of you may know, the stock market in Japan has crashed in the last 24 hours, just shortly after we saw a weakness in the American stock market. And really, it's just an overall looming fear that Japan believes that we're going to be going into a recession, which is then going to deem their market hyperinflated as well, and that would crash the Japanese market as well. And it's important to keep in mind, this is really common to see, especially as we see more institutional money flow into crypto, because institutional money means that big players, countries, so on and so forth are buying into the crypto assets. So it's going to start trading more like a foreign exchange or a forex currency, where you're going to want to look for the overall macros in the world and global macros to decipher how trades could be going throughout the day. Because as we get further into the expansion of Bitcoin and crypto, we're seeing the effect of these countries that are buying and selling. For example, Iran, where this is the second time that they've talked about going to war, and this is the second time that Bitcoin has taken a dump, and they also have a large Bitcoin reserve, which they could be selling to pay for their defenses. Now, on top of that, you have the macros of the US, you have a lot of banks that are crumbling now, you have Japan in fear, and the overall macros of the world are not looking too good. And all of this is going to affect crypto more and more as more institutional money flows into the market. Now, what you see here marked in the white lines is going to be the open of the Tokyo market and then the close of the Tokyo market. I have a video that I released within the last month that talks about trading within these time zones and trading different stock markets. And you can see we created a range low at about 48.8, which still has not been tested in the New York market. We have been playing to a strong upside in the last 4 hours in the American market or the New York stock open. But as you continue to zoom down, you are starting to see more and more weakness on the charts. Now, because we had such a quick sell-off, I am looking on the short term for a quick impulse move up, maybe to, let's say, test the 60 to 64K range again. But all in all, when you're looking at the overall macros, it's important to keep in mind that we are distributing and volume is outflowing. And from a long-term perspective, I am ideally looking for a retracement into the 45 to 39K range. That would be a great thing to see, and theoretically we could potentially get down to the 34K range. If that would happen, I would see that more as like a lower liquidity, quick little dip situation and a panic sell-off. But knowing how volatile the crypto market is, that is something that can happen, and it's something that you have to take into consideration if you're trading, buying, or selling at this point in time. Now, keep in mind, none of this is financial advice. This is all for educational and entertainment purposes, and really just things that I see on the chart and what I'm looking for as we get into the actual super cycle. And when I say super cycle, I mean Bitcoin hitting 120, 150, maybe even $200,000. We haven't quite gotten there yet. I'll save that for another video. But if you did find anything useful in this video, make sure to hit that follow button. If you want to stay up to date, you can also join me in the EPIQ trading floor that does come with a free 7-day trial. So it's absolutely risk-free. That gives you access to our trading view overlays and oscillators, buy and sell signals, our academy, and a lot of other resources. I appreciate you all so much. Safe trading, and we'll see you on the next video.